Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, the standard disclaimer is registration granted by SEBI, membership of BASL, and certification from NISF in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. With this disclaimer, let's move into the main part of the podcast. That is understanding Nifty's price volume action. Recently, for the last more than a month of trading, Nifty has been hovering around its 21 DMA, the green line here, and it has been acting as a very good level for the Nifty as well. If you look at the last week as well, Nifty traded above this 21 EMA, but uh, 2 days back, that is on Wednesday, this 21 DMA was tested, and yesterday it closed very near to its 21 DMA as well. Volume has picked up in the yesterday's session, which is a good sign. For the four trading sessions before that, the volume stayed below average. And for the going forward, this 21 DMA and 50 DMA are going to be very crucial levels for the Nifty. If the 50 DMA is breached, we might see further selling happening on the index, but that is looks like that is not going to happen. But going by the numbers and macroeconomic pointers as well. And coming to O'Neill's methodology, we are in confirmed uptrend, and distribution day count has decreased to 3. And if there is any further accumulation of distribution days, distribution day is when Nifty declines 0.2% or more on volume higher than the previous session. That is called as the distribution day. And if there is any accumulation of distribution days to further 5 or 6, and if it tests its 50 DMA, we might change the market status to under pressure. Until then, we continue to stay in confirmed uptrend. Coming to key news section, yesterday GDP for the December quarter for India has come out very good. The GDP has shown a growth of 8.4%, which was much faster than the expected growth rate of 6.6%. However, GVA, which is gross value added, has increased 6.5%, which was in line with the expectations. So overall, on the GDP front, it showed very good growth, even though government spending has come down slightly in that previous quarter, but the growth rate was very good. So we might see a positive reaction on the stock market as well. Vedanta, the Supreme Court has dismissed the company's plea seeking a reopening of its sterile copper smelter plant in Tamil Nadu. And coming to ICICI Bank has bought another additional 25 lakh shares in its ICICI Lombard insurance company. So with this, ICICI Lombard has become a subsidiary of the ICICI Bank. And today, auto stocks will be under focus because of February sales data will be coming out. So the auto stocks will also be under focus in the today's session. In the yesterday's session, foreign institutional investors were net buyers. They bought more than 3,500 crores of Indian equities, whereas domestic institutional investors were net sellers, but magnitude of selling was lesser when compared to the buying by the foreign institutional investors. Overnight, US market closed in the positive territory. Dow Jones with a gain of only 0.1%, but S&P and Nasdaq closed pretty much higher. Asia markets are also trading in the positive territory. Shanghai is trading 0.1% higher, whereas Nikkei has been trading with a very good gain of 1.8% as we speak. KF Nifty is also indicating a positive opening for the Nifty index around the 22,200 level. So going by the GDP data, we might see Nifty opening on the positive side, and we might see institutional investors also taking positions by looking at the economic growth of India. The chart of the day, we picked Macrotech Developers. The stock has been looking very good. You can see it is trading in the second consolidation base. Ratings have been very good. EPS is at 93, indicating strong fundamental character. Technical ratings are also looking very good. RS rating is 82. And if the stock breaks out on higher volume, RS line will also trend higher and RS rating will also improve. And base formation has been very ideal. You can see during the base formation, volume has come down, and you can see these blue towers, which are very good. Stock coming towards the pivot, volume picking up is a very good sign. And during the base formation, you can see 50 DMA has been held as very good support for the stock. So many pointers are looking very good for the stock. Number of funds section is also looking very good. You can see consistent growth in the number of funds, which is a very strong indication of institutional investors taking fresh positions or accumulating the stock. So overall, it is looking good. It is another 5% to the pivot. If it breaks out on higher volume, definitely it can consider for adding. And 50 DMA can be kept as a stop loss because that has been acting as a very good support for the stock. Thanks for joining today's people. Have a good trading session.